Hello and welcome to Upside, where every week we dig behind the headlines to give you the real news about what is happening in Europe, startups, venture and investing and all that good stuff. This week, it's Mads, Lomax and myself, and we've got a very, very busy docket. Hopefully we can get through it all. We have the inference revolution. We've got the AI enterprise war. The largest investor in the world is a little bit spooked. What AI can do, will do, and how far will it be adopted? We're going to go into that. More business model side swiping from the hyperscalers, so startups, watch out.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Now, starting at the top, GTC, the inference revolution. This week, Jensen Huang told 30,000 people that Nvidia will see $1 trillion in chip orders in 27, $1 trillion. Also this week, Tom Tungas from Theory Ventures ran the numbers on what's going on underneath that bet. And he reckons for every dollar the hyperscalers earn from AI today, they're spending 12 to build more capacity. That's around $600 billion in capex this year alone. This is the tricksy bit, which I want us to dig into, financed by nearly 160 billion in new bond issuance. Bill Gurley, another famous Silicon Valley VC, is saying the quiet part out loud, saying a reset's coming. Waves create bubbles. We talk about this all the time, but I think Bill Gurley is somebody to listen to. The Mag 7 are now in official correction territory, down 10% from October highs. All the SaaS providers like Salesforce, ServiceNow are 25% off year to date, and service software or software ETF is down 20%. So we're watching the greatest infrastructure build out since electricity and the most expensive game of musical chairs in history. Mads, I'm going to start with you on this one. Shall we start with Nvidia's GTC, or where would you like to start, my good man?
I think that's a great place to start. It is one of the most important set piece tech events of the year. Now, last month in February, Jensen Huang, he told the Korean Economic Daily that we'll bring out a chip that will surprise the world. Why did he tell them that? Well, that's because right now the most constrained things in this world of constraints is memory chips. And many of the memory chips get made by Samsung and SK Hynix in Korea. So that's an important place. That's where Jensen went. He spoke with people and with the journalists. And he said, we're going to bring some cool stuff out. He didn't bring one thing out this week. He brought out 3 cool chip announcements. The first one was the thing that came out of their acquisition of Grok. Grok they acquired for $20 billion a few months ago. And they're going to bring out the Grok 3 LPU, which is an inference chip. And when you look at the performance on a token per watt basis, so as we know, power is this massive constraint we have. And so you really try and figure out how can you maximize the amount of tokens you can generate with the power you have in these data centers. Well, it generates 35 times as many tokens per watt as a GPU-only basis. That should ship from Q3 this year. It was a nice big announcement. He's also announced the Vera Rubin GPU. So that's the next generation of the sort of classical NVIDIA workhorse, the models we can use for kind of the chips we can use for both training and inference. And that the GPU will be 10 times as performant per watt as Blackwell, which is the current state of the art, 5 times on performance, 10 times lower cost per token. And so that's seen as a major jump. I mean, you think about it, there's some places in the world where we think, oh gosh, if you can improve 10, 20, 30% a year, that's pretty good. If you can double, that's phenomenal. We're talking about a 10x from chip generation to chip generation. This is not marginal
stuff, is it?
No.
These are big leaps.
These are massive leaps. And of course, that feeds into all the stuff we're talking about with capex and what happens there. Because if you've got a ton of expensive kit you bought last year and you're still writing that off and you get new kit coming out this year that's 10 times as performant, well, what does that do with the economics?
Yeah.
So, and then the third thing, just to round that off, is the Feynman chip, the sort of 2028 generation. And it feels like that's a little bit further out, but it's quite exciting because it's going to be the first sub-2 nanometer chip produced. TSMC is making it. They're talking about stacking the chips in a 3D way. So you're going to have a kind of silicon on top of silicon. You're going to have 8 times the rack density of Rubin. So you can cram a lot more stuff into the same amount of space. Again, we know the data centers are all the premium right now. So stacking much more into the same amount of space, making those same chips much more performant. We're really seeing a dramatic improvement in the performance here.
It's incredible. Lomax, I mean, this is kind of their Nvidia's now looking in the inference territory. What would you pick up on here?
No, nothing. I just think just when people, no, I mean, not people in the industry, but perhaps outsiders still were wondering where the peak was for Nvidia, Jensen pulls out, and shows a very, very clear, compelling roadmap for the future and for the business, predicting what 1 trillion revenue or 1 trillion purchase orders in 2027. So
yeah,
in a way, just when it's not, I wouldn't call it a rabbit out the hat moment, because it's clearly not, a surprise in that sense. But it's
well, they were booking 500. They were booking 500 bill, weren't they? So they basically doubled their outlook. Is my assumption.
Yeah. So they keep they have the current generation of LLMs have been trained on the backbone of Nvidia, and AI going forwards will be run on the backbone of Nvidia in the real world. In context of inference. So hats off to these guys. One. Definitely not sideshow, but other thing that perhaps Mads didn't touch on is the Nvidia and StarCloud announcement. So we like StarCloud in this pod, I think, at least I do, because the founder Philip is an English dude, and he's building something that's probably a very un-European, which is something historically un-European, which is clearly a massive big swing kind of moonshot company, which is putting data centers in space and has generated, I think,
because Jensen used his video to kick off, didn't he?
Exactly, which is, I think it's amazing. Just remember, by the way, StarCloud is basically a seed stage startup. Right? I think there's probably a big round that's happened that hasn't been announced yet, but you know what I mean? Like, this company is very, very young.
Yeah.
Philip only started posting on socials about 9 months.
Did he know, do you think? Well, I mean, did he know that it was going to be used at the beginning of the conference? And what an amazing thing if you're watching it and then all of a sudden your video comes on the screen.
I think he had the inside track.
I'm assuming they did.
I mean, some of the friends of ours were early into that. I think it was a Y Combinator company. Some of our friends invested early in that company. A lot of our friends passed on that company because they thought it was batshit crazy, which.
Moonshots, baby. Literal moonshots.
But interestingly, look, he's now being taken very seriously. I think it probably helps that Elon has now made this as a central proposition of the SpaceX story going forwards, or at least it was a convenient narrative under which to roll XAI underperforming into SpaceX. But still, sorry, just going back to the substance of this, the announcement is around unveiling a space optimized version of the Vera Rubin AI platform. So the data centers in space narrative or story is around inference. It's not around training, right? So clearly, we have a lot of announcements and push towards inference at Nvidia. This is effectively an adjunct to that. So exciting times indeed. I mean, how many companies that are that young get their name up in lights alongside the top, 3 whatever company in the world? At one of the big, at their marquee conference. So I think it's we all see lots of startups get their name on that frigging thing in New York, right? Which, the NASDAQ thing or whatever it is. But this is an impressive thing. So,
Mads, anything else that you'd pick up on here before we move on?
Yeah? Come on, guys. Let's see more of it.
Fabulous.
Yeah, no, I'm with you. I think it's a lovely story. I'm still not sold on data centers in space, but who cares? It's a lovely story, and we're going to see what happens. Mads, anything else before we move on?
Well, I mean, I think just worth stopping up and just reflecting on the meteoric rise of NVIDIA. And the question on everybody's lips is, of course, this has been the bellwether of this bull AI market. Can it continue? For how long can it continue? And what Jensen is saying, look, we are no longer just a GPU company or a chip company. We're a platform company. We've got 5 layers to our business. We've got the chips. We've got the networking. We've got the models. We are also looking at energy, and we're looking at applications. It's a full stack. And that 5-layer cake is what he's saying is what's going to present us with the opportunity as a business to keep growing into the future, keep growing earnings, and therefore NVIDIA will remain a good investment. And if you try and unpack those 5 layers a little bit, well, he's certainly got the chips. We've got more than $200 billion in annual run rate revenue now, growing very fast. He's also got networking. There was the Mellanox acquisition. That's delivering more than $10 billion per quarter in revenue now. It's a massive business. He's got the model side where there's sort of an Android play. They've got the Nemotron coalition. They're working with Mistral and others on models. That's less of a monetizable part of the business right now and looks more like something that can drive hardware revenue. On the energy side, he's building reference architecture for data centers to make them energy efficient. And they have been investing in energy generation. But again, it's a rounding error in the business right now. And then there's the whole application side, which again looks mostly like it's driving GPU sales. So if you unpack it a bit, Nvidia still very much feels like a hardware and semiconductor company, but it's certainly a very big one. And so the question, of course, is can it keep growing? Is this a buy right now? How should you think about it? Because it drives the market. If Nvidia is a buy, the market might be a buy, right? Because it's such a big part of the S&P 500 and the NASDAQ 100. Today, it is priced like the market on earnings. So about 21 times forward earnings. And that is roughly like the S&P 500 at large. But the S&P 500 at large doesn't grow 73% a year. So you look at that and that sort of screams, gosh, might this be a buying opportunity? And I think that's where we get some kind of a level of maybe just cognitive dissonance. You're looking at this thing that's kept growing and growing and growing, and everybody's saying, look, for close to $5 trillion value, could this go to 10? Is that possible? If you look at how it compares to some of the other Max 7s, Apple is priced at a much higher premium, 29 times forward earnings. Meta is a little lower, but Amazon is also higher. So it looks cheap compared to some of these other big businesses. And so what would have to be true for there to be upside in the business? Well, if they can maintain their margin, and if the hyperscaler capex meets and exceeds the $600 billion this year without major cancellations in the backlog, it seems like there's upside on this stock. Could it go to 200, 225? Possibly.
This is not investment advice.
Well, I think we have that disclaimer baked in now at the intro, don't we? But we know everybody, like if so many people we know are invested in Nvidia shares, and this is the question they have is, can it keep going up? Should we cash out now? What should we do? So that's the bull case. The bull case is actually just if they do what they said they would do, it feels like there's upside in this one. The bear case is that the capex decelerates, and we're going to unpack that. I know you had Gurley on the docket. We're going to unpack that. If the capex decelerates, if that $1 trillion backlog starts to see cancellations, if the competition in inference from Meta and from Google's own homespun and homegrown silicon starts to eat into that inference market share, then you could see a kind of a downturn in the value. So that's really the risk that three of the biggest customers, the big hyperscalers, half the receivables, they are building their own competitors.
Yeah. Interesting. What a fascinating time to be alive. I want to talk more about AI models because we're seeing across the three big labs, we're seeing three new business models that I'd like to unpack. We've got OpenAI, who've just told staff to kill all the side gigs. So Simo and Altman are refocusing the entire company around coding and business users, admitting that trying to do too much has basically put them on the defensive. Anthropic's going the other way. Instead of selling to enterprise, they're now looking for distribution through PE players like Blackstone. So they're looking to embed a Palantir-style joint venture that would get Claude distributed into all of those PE portfolio companies, turning thousands of those businesses into instant distribution. Very smart. And then we've got Mistral on our side of the pond, the French lab. We shouldn't dismiss. They showed up at GTC this week with Forge, which is a platform that allows the enterprise to train their own models from scratch on proprietary data. And they're on track to pass $1 billion in ARR this year. So centralize, partner, hand over the keys, all three. What's in this kind of new model set? Lomax, can you set the scene for us?
Well, I mean, they're all fundamentally going after the same thing. As in, like, I wouldn't call it three different business models. I would say there's three different routes to market and ways to go about things, distribution methodologies or channels. But ultimately, what's happening here, all of these people are going for enterprise. Right? Anthropic have already leaned heavily into enterprise already. Mistral were heading that way, although they started obviously with their chatbot. And OpenAI, we know, has been a bit of a bugger's muddle, excuse my French, of various different.
I've never heard that phrase before.
Probably your grandfather would have used it, but had definitely been a smorgasbord of slightly disparate different products with horrible nomenclature, as we know, and they seem to be maybe coalescing now on enterprise. So the single unifying thing is that they're going after enterprise. They're doing it in different ways, as you allude to, right? And so, one example is what Anthropic is doing now with Blackstone, finding a route to market to go to their, Blackstone obviously being one of the biggest private equity firms in the world with tons and tons of assets in its portfolio, right? So there's a big channel partner there, as it were, with Blackstone looking for optimizations within their portfolio. So for me, it's actually all the same thing. I don't know if Mads, you have a different take on that.
No, I think you're broadly right. The race has shifted from developing model capability to deployment and distribution. Right. And you are seeing slight variations for the three companies. I would say everybody's looking at enterprise, but the big play for OpenAI, as I see it, is still whether they can unlock the consumer market. The trillion-dollar question for them is whether they can make ad monetization work. If they can monetize the long tail, there could be a super interesting company here. Without ad monetization, I think they're in a world of hurt, because I think if all they're doing is try to do exactly what Anthropic is doing and just try and go head to head with them, saying, yep, great, you got Claude Code, we have Codex, you are selling to enterprise, we're going to try to sell to enterprise. Without that differentiated strategy that looks at the consumer side, I think OpenAI will lose majorly here.
That's a really great
but Matt,
point.
Do you think ad monetization will work?
That's the trillion-dollar question.
Because nearly 1 in 7 people on the planet are users of ChatGPT. No, was it 800 million users? No, is that right or not?
Yeah.
Yeah, and if they can't monetize the 95% of them, and if they'll never be able to monetize them, then I think it's a really difficult position they're in.
I don't buy the ad model. I think it's too commoditized. I think while you've got extremely powerful competitors, I don't know how, unless everybody does it, I don't know how you survive in that world.
And Codex, so Codex now is what, 2 million weekly active users, roughly 4x growth year to date. So Codex is on a bit of a move now within OpenAI.
Yeah, I mean, but it's going to be number 2.
Yeah, that's true.
And don't forget, OpenAI trades.
And actually, you're right. It's funny, you go and raise, Sam, they go and raise the money at the higher valuation, etc. And then they you can't pitch to be number 2, right? It doesn't work.
100%. You have 3 times the valuation. You're spending much more money. You can't be number 2. So I think they have to have a differentiated strategy. I don't envy Sam right now. I think he's got a really difficult year ahead of him, which of course is why we're seeing the code red.
Mads, they've got government. I mean, what? Roughly 50% of Palantir's revenue is from government. So do you think that would be a rescue package for OpenAI?
Jesus.
I don't think rescue packages are not.
No, it's not. It's not a life raft, no.
I'm not proposing that the company will disappear.
No.
Okay, I'm just saying the trajectory they were on now, there was a thought that it could become the first bona fide trillion-dollar private company, right? And now it looks like, SpaceX, might that sort of kind of look like it is right before the IPO and all that stuff. But that OpenAI could genuinely go and raise a private round with $1 trillion price tag. That seems very questionable right now.
Yeah.
I mean, who is going to underwrite that?
So the growth rate is there, right? And they're probably now run rate 30 billion ARR, but they need to show a very coherent, compelling story to get to 300. And
yes,
they need to, no?
That's this new strategy. This is the beginning of that narrative, right? This is we're going to focus, we're going to condense, we're going to do things slightly differently. Okay.
So you're in Sam's shoes, you would abandon the consumer strategy. You just say, we're not going to monetize it. It's not going to work. And then try and focus on going after Anthropic.
Well, that's what he's doing.
Is it?
Well, the question for the room, how far have they got down the ad strategy for consumer? And I personally don't believe this can work. I don't see how any friction within a standard chatbot for the everyday person is gonna fly. They're gonna just move. It's like, who is the best search engine? They're gonna move. They're gonna flip over
I love
Gemini
the certainty you have and that you bring to this. For me, it's the $1 trillion question. If it doesn't work, I think the company's in a world of hurt.
Really?
That's all I'd say. Yep. But I don't think we can know until they've really given it a good go.
Yeah, and almost like if you go back to the blank canvas and be like, you have eight whatever the number is, 850 million, what is it, Mads? Weekly active users, monthly active users, whatever the thing is. If you can figure out a way to monetize that in this new world, then that's a pretty unique, compelling thing, right? And so actually,
that's the game changer.
Yeah. And actually, in a way, Matt, and in a way, Dan, you're right. Like advertising revenue is the probably easiest thing to think of, but I actually think about it from a new world perspective. They need to think through there may be other ways to monetize that user base, right? And if they get that right, then it's pretty compelling.
Well, at the end of the day, I think, either the users pay or the users of the product. And if users of the product, that's some kind of ad model, referral model, something. Google, did it, and then Meta managed to do it on a slightly smaller scale. They showed how you could build these businesses and how powerful they are. There's so much money in monetizing users. So is it going to work? Well, I certainly wouldn't say it's 100% certain that it will. I think if it doesn't, they're in the world of hurt. And if all they're doing now is saying, we're going to pull back from monetizing that, we're just going to go after enterprise, copying the Anthropic strategy, I think they're toast.
You're right. And there's also incredible, I know OpenAI have hired a bunch of these people, but there's incredible talent and retained knowledge and know-how and muscle in how to monetize user bases, right? In Silicon Valley. It's the backbone of the whole freaking industry. I
never thought that Facebook would last this long, and that's their model, right? I logged into I haven't been on Facebook since 2014.
Yeah, but that's not, Facebook isn't, the actual Facebook product is an absolute mess, but
it's just a marketplace. It's just one big advert. I logged into my wife's the other day while I was flicking through, with permission, by the way, before I get in trouble. We were talking about something, and she showed me something, and I was flicking through, and I haven't looked at the platform in a long time. I was like, oh my god, what a. I know this isn't there, is WhatsApp and Insta and all the other products that are making the real money, but what an unholy mess, and people are still tolerating it. So I might be wrong. Maybe people will tolerate ads within ChatGPT. I think we've moved beyond that kind of 2010 play. I think users are much more discerning and technically savvy now.
That's why I'm challenging you, Dan, to be like, well, just if you can't chuck adverts down the channel, down to the 850 million people, that doesn't mean your ability to monetize that is dead, right? I don't know. Think outside the box.
Yeah, it's got to be something else pretty compelling though, if the users are the product. Anyway, listen, let's move on, because I want to talk about another. I know we're upside, and this is a bit doomy and gloomy, but bear with me. So, to tee up, the world's largest investor in the world is spooked. So the broad question is, should we be, or how should we think about this? Nikolai Tangen, who's the man who runs Norway's $2.2 trillion sovereign wealth fund, told Bloomberg this week that markets are showing a level of complacency about the Iran war that his scenario analysts can't explain. The fund's stress tests say that an AI bubble burst could wipe out 35% of its value. So as we know, SaaS is getting crushed. And as we've mentioned already, the hyperscalers are spending $12 for every one they earn so far. A third of the S&P 500 is 7 stocks. And those 7 stocks are an all-in bet on AI that hasn't quite paid off yet. Still a work in progress. Over the past decade, the sovereign fund's equity portfolio shifted from 37% US to around 55% US. So they're very big on the US. They own, interestingly, around 1.5% of all listed equities worldwide across 7,200 companies. And when you're that big and you're that indexed, you are the market. You can't sell without moving prices against yourself, I would argue. So the warning itself is the action. What happens when complacency meets concentration is the broad theming here. What would you do in his shoes? What can we learn? How should we think about this? Mads, anything in this for us to unpack?
For several years now, we have been saying that this is not like 2000. This is not like the dot-com boom. In the dot-com boom, there was debt everywhere. People were levered up to their eyeballs. No real revenue, right? People were measuring eyeballs. It was a silly thing. Yeah. But this was different. There's real revenue. The capex is financed out of real free cash flows. People that are spending money have money to spend. Much less leverage. It's much more solid. Very different. And in 2024, that was certainly true. The hyperscalers, they funded the AI from operating cash. Now, fast forward to 2026, Amazon is turning free cash flow negative. Okay, so they can no longer fund the capex build out of the free cash flow of the rest of the business. Alphabet's free cash flow is down 90%. Meta is near zero. Meta is near zero. They're not even making money on AI. They don't even really have an AI business. Okay, so what's interesting here is as you look into 26 and 27, we are seeing negative free cash flow for the hyperscalers. And that, of course, changes the narrative because, well, it might not be 2000, but it's certainly not 2024 either. Alphabet recently issued 100-year bonds.
Yeah.
Right? So whole new stories are coming up. And this is some of the thing that I think you go to Nicholas Tangen from the Norwegian Sovereign Wealth Fund. He says, I'm a huge fan of the AI. It's massively increasing our productivity. I believe in this, but I look at these numbers and the leverage and what's happening. And as an investor, it worries me.
Yeah, I've always been of the mind that as soon as this level of credit goes in, this level of debt is being. I saw was it who was it raised a $25 billion bond? Was it Salesforce? I think it was Salesforce had a $25 billion bond sale. Lomax, which aspect of this would you pick up on?
So I think it's an interesting point. Like Mads is totally right, and the head of Norwegian Sovereign Wealth Fund has a massive point. It's kind of classic. He's basically saying this is sort of late cycle. People are so bullish and enthusiastic, they're almost mispricing actually some quite structural risks that are now creeping in into the market.
Well, he was focused on the Iran war. He's using this as kind of the warning point.
On the inflation that will come out of the Iran war, which is a good point. And remember, when you have inflation, you have rates going up, you have a flight from equities into debt instruments, right? Because they're paying higher coupons. So that will potentially cause a rotation, which will then soften valuations. And and then Mads has just articulated it very well that ultimately the Amazon's now running free cash flow negative for the first time, like probably ever, or since it actually became a big company.
Well, since the 90s.
Yeah. So I mean, this is now the time, and the debt on these projects is only higher and higher. We should be wary.
We should watch. Yeah, we should watch. I mean, I don't know what this means for. Well, we do know what it means for European venture, but I don't know as it cascades through our world, what this means at this level. I don't know what other things we could uncover and discuss. It just feels like something
I think it's just like
be mindful of.
Be careful. Like these companies used to be the greatest like cash machines ever built, right? And now they're borrowing money to plow into data capex because they're running out of haven't got the free cash flow anymore. The only kind of interesting observation, which maybe you guys picked up on, is that Apple is basically sitting out this huge capex.
I love that graph, the graph of all the crazy hyperscalers, and then Apple just bumbling along.
They're still doing their share buybacks. They took a big license out of Gemini. They're quietly strengthening their own chips for their own devices. Actually, like kind of pretty impressive performance, right? The M5 now delivers 4 times the AI performance of the M4. Actually, Apple quietly continues to operate in the old manner, and maybe it's the right strategy. Maybe it's not. I know.
It's all. I mean, I was looking at all the on device with the M5 Pro up chipset, all the on device AI. It feels like an infrastructural tee up for running on device algorithms. I think there's something in. As you know, I'm a big Apple fan, and I've always thought the Siri will one day become useful. And it feels like there's this kind of like this network play that's going on with this new chipset.
Yeah, it is genuinely fascinating. And I'd say the other side of the coin, because it's easy to be a bit doom and gloom. We were talking about the Black Swan memo a couple of weeks ago, right? And you write one of those and you look smart if it comes to pass. And if it doesn't come to pass, everybody forgets about it. Now, Bill Gurley is somebody I think we all respect a lot. And he talks about these bubbles and maybe see bubbles in the past. And they're always, because there is something good, but then people get greedy and in over the skis. And the question is that where we are now? The truth is, revenue growth has been extraordinary. That's the big difference between now and the dot-com boom. I mean, we've seen how OpenAI and Anthropic have grown revenue, and all the others. It's just phenomenal. And yes, it's still not enough to justify the full capex build out, but at the growth rates we have, is it conceivable that one could get there? And you probably don't need revenue to grow much more than fivefold from where we are now for things to start hanging together. And so fivefold, does that sound crazy? Well, we know what Anthropic did last year. You know, the industry in a couple of years will probably be 5 times the size it is now. And if it then grows another 5 times after that, well, suddenly this starts to become a really, really big market. And I think we're just all looking at it and saying, could it grow 5 times from here? Yeah, that feels eminently plausible, given how impactful this is. 5 times more after that, so that's 25 times from where we are now. Maybe that's toppy. But there is certainly a scenario that you can paint that actually this is a justified capex build out. This is justified investment because of the size of the opportunity in front of us. So I think the question is, will the revenue grow fast enough to catch up before the market loses patience and says to the hyperscalers, guys, we're going to slash your equity price in half. The cost of raising this money is going to be so expensive now that you can no longer justify the massive capex build out.
And I think we go back to the big D word is depreciation, because I think like if you build your data center, you incur the capex for that, you buy the chips, and then you need to replace them. If you need to replace them within, I don't know, 24 months
years.
or 12 months now, if it compresses from the current companies, suddenly the revenue you need to generate to pay back both the initial capex and then the reinvestments you need to make to rip out and replace your chipsets, suddenly you need to be making a lot more revenue to justify and pay back the capex.
If that happens, you will have incinerated an incredible amount of capital. The question is whether you will have built the business with some staying power. Is being a hyperscaler a moat in the future? Going back 15 years, when kind of before we knew what a hyperscaler was, when cloud became a thing, people were looking at Amazon, and they were looking at Google, and they were saying, is this a real business?
Yeah.
You used to just, right? And it turned out that was an incredible business. So are we seeing this new business here as an embryonic thing? Now, I think it is a genuine question, and I think the people that are asking the question are generally right to do so. It is by no means a foregone conclusion, but I don't think you can write it off either.
No, well, it leads very, very neatly into our next topic, which is effectively along the lines of what can AI do? What is it doing right now? And how far will it go? What will the adoption cycle be like? So we're understandably seeing mixed messages across the market around this AI capability to adoption piece. This week, we saw this lovely story about a Sydney tech entrepreneur who treated his dog's cancer. And he has zero medical training. He was using ChatGPT to brainstorm a treatment plan, AlphaFold to create the protein structures, and a university lab to manufacture a custom mRNA cancer vaccine for the dying dog. And the tumor shrank 75%. Hopefully he's still alive at that time of release. It cost him $3,000 and took 2 months. Same time, we saw DeepMind this week published a paper admitting the industry can't agree on how to measure AGI. So they've proposed a 10-dimension framework and are now paying researchers $200,000 to help build the tests. Also this week, we saw Deloitte found that 5% of SMEs that are using AI are seeing no value. So we've got all of these. I know there's a bit of a disparate story set here, but we're seeing lots of AI usage, adoption. I guess if the smartest lab in the world can't define what intelligence is, 95% of small businesses can't really use AI. We're going to see that play out in 2026. This feels like the story from creation to adoption that we're going to see this year. Lomax, first up, in your world, tell us more about the dog and the cancer piece.
Everyone loves the a companion animal story. First of all, okay, big picture. This is an amazing thing. So there's obviously been a lot of hyperbole in the press around this and on social media about how the citizen scientist used AI to basically treat and cure his dog's cancer, right? First of all, it's incredible that those tools exist today, that he can even, because the dog, let's just be clear that the dog's cancer is not cured, right? The dog is still going to die of cancer. It's probably had its life extended by 2 to 3 months, which, actually, like quite a few cancer treatments, when you get into actually, that's all they do. They aren't necessarily curative, right? So it's amazing that this person has done it, but let's put it in perspective. The dog is not completely cured, right? It's going to die of cancer.
To be candid, he took the dog from a rescue home, knowing that this poor creature had cancer, and was just going to look after it in its last days. So this was a known thing.
But this is incredible that he can do this, right? Because if he can do this with, a few hours a day and a few grand, imagine what the big, well-funded institutions can do. And this quietly is happening already, right? It just takes time, because clearly, to get these therapies into patients, you need to run clinical trials, and they'd cost a lot of time, and they cost a lot of money and take a lot of time, like hundreds of millions and 1 to 3 years potentially. Now, what's really cool, I think, is this is the mRNA technology, which is the technology kind of popularized by the COVID vaccines, because obviously Moderna in the US and BioNTech in Europe, which is one of the biggest success stories in European tech that a lot of people often forget, had this ability to create these mRNA vaccines, which you can create in silico, like in a computer, pretty rapidly, right? When you sequence the tumor, you get the data from that, and then you run a bunch of bioinformatics and machine learning and AI on that to find out specific antigens that you want to go after on specific proteins, and then you can code the mRNA and then inject the person to train their immune system to fight these specific cancer cells. That was seen with COVID already. That's phenomenal. That is getting better and better and better. So AI is going to play a huge role in that. So I think it's a wonderful story. I mean, by the way, there are no approved mRNA vaccines yet, right? There are some in late stage phase 3 in the last stage of clinical trials. So we still have, to get this done at mass scale to actually affect human lives takes time, but it's going to happen. Absolutely. And it's very exciting.
When I read the story, it made me think about personalized medicine. It made me think, obviously every body is different. It made me think, well, how far are we away from a very, very personalized
we're not that
medical...
far away. I mean, there can be complexities, right? Because if you have someone with a tumor and the tumor is very deep inside their body, you need to actually extract the cells from that, right? And that can be hard. In my case, the tumor was removed and then we sequenced it and then we managed to run the analysis on that, right? But for a lot of people, you find, especially if you do all these preventative MRI screens now, you might find tumors buried in your liver or in your pancreas. And then you need to actually extract that doing an invasive biopsy, which is possible. But all of this stuff takes a lot of time and costs a lot of money and puts a lot of pressure on healthcare systems. And if you're in the game of only increasing someone's lifespan by a few months, then the people who pay the bills, the insurance companies or the governments, might be like, well, it's just not worth it. Because as you said, these are personalized. You then need to do the sequencing, and you then need to actually make the individual vaccine. It's not like COVID, where once you've made it, you can just manufacture it at mass scale and just give everyone the same vaccine, right? But we are going to get there, despite all of the roadblocks that I just talked about, and it's very exciting. And by the time we get to our kids' lives, cancer will be predominantly 90% of cancers will be dealt with in the same way that we deal with a common cold.
That's a big bold
If
one.
you listen to the dudes in Silicon Valley, they'll say all disease will be cured by 2030. I mean, that's clearly absolute rubbish. But if you take cancer, for example, which is obviously one of the biggest, after cardiovascular disease, is the biggest killer of people, we will get to that position. It's just going to be another 20, 30 years out. It'll be about how our kids
I can believe that.
Probably is my prediction.
I can believe that. It does feel in the crosshairs. Mads, which bits would you pick up on from this little smorgasbord?
I think it's worth reflecting on just how far we've come in the last 3 years, where if you remember, some people had the view that it's kind of LLMs, ChatGPT, AI, but what was it more than just an expensive autocomplete? And this is, as we can see, a whole lot more than just an expensive autocomplete. It's real intelligence. Now, it's not a principle. And the question is, what is left to do if AI becomes as good as it is becoming and can do all these things? What's left for us to do? And I think that's so interesting to see this collaboration here between what the AI models are doing and then the principal, the person operating those models. You scale that to everybody in the world, anyone facing a PhD level problem now has a path to solve it. It's truly astounding. I marvel at it every day. As the models grow more and more powerful, what is left for us? Well, sort of the four categories we look at, it's judging, it's creating, it's connecting, and it's exploring. You're taking them in the reverse order. Exploring, it's really pointing the telescope, thinking about, where should we look? Where should we explore? What are the frontiers we should try to cross? Connecting is all about kind of human relations. And one of the things we've seen is, although we've had record players and recorded music for a long time, but live music is bigger than ever. Hundreds of billions of dollars. We go to see live musicians performing because we want to have human connection. And that is going to be a bigger and bigger thing, right? And AI will hopefully give us even more opportunities to say AI can do the drudgery and we can spend more and more time with each other. Creating, giving things form, turning a want into a real thing. Well, when the production is free, the ability to create things is free, the imagination becomes the scarce resource. And taking people's desires, and they could be limitless, and turning them into real things in the real world is very much a human endeavor. And then there's the judging piece. It's the what should I focus on? It's, what should I sign off, right? It's the surgeon that signs the consent form. It's the investor that commits capital. Now, the AI can be extremely clever at analyzing all kinds of things, but it has no skin in the game, and humans do. So those are some of the four pillars that we think will be most important in the years ahead as the AI keeps getting better. This might lead nicely into the AGI piece, Dan. I don't know if you wanted to go there next.
Yeah, I wanted to know what your thoughts were on the measurement and what DeepMind is doing, if you had any.
No, I mean, it's obviously kind of from a science, kind of the science of AI, DeepMind is at the front of the front, right? They're great engineering labs. OpenAI, Anthropic are incredible engineers. But when it comes to kind of the hardcore science of artificial intelligence, I don't think anybody is further along than DeepMind. And what's really interesting is they've said nobody can agree on what AGI is, so let's try and define it. They've done that by mapping out 10 cognitive faculties that are mapped against human baselines. So sort of saying there are 10 ways we can measure how a human operates from a cognitive perspective. And then we can say, how good are humans at those 10? And how does that compare to the AI? And when the AI exceeds what the human can do, well, then we have some kind of AGI. What I found interesting is that the tests are all disembodied. So they're text and images. It's not touch. It's not spatial awareness. It's not physical world test. And if you look at the learning faculties, they're very much about things that are kind of the models can do in the scheme of what we know as an LLM today. Whereas actually, I think so much of what would be required for you to have real AGI would be things in the real world. One of the things we've seen with these models is that some of the really hard stuff, kind of all the PhD science level stuff, is easy for the LLMs. But some of the stuff that's easy for us, like catching a ball, is still really, really hard for AI models. And so no LLM comes close to a 3-year-old's ability to navigate in the real world. And so for me, until you embed those real world aspects into your AGI definition, you aren't really talking about AGI.
Wow. Listen, they're smart enough to get there. Lomax?
No, one more thing, like I would add, which I could probably articulate better if I had more time, but one is around verification of the outputs of AI. And you can go back to this dog mRNA example, right? Is a clinical trial in the case of medicine is basically one big verification exercise, right? To check the safety and the efficacy of what you've done in silico and then in mice or monkeys or whatever organ you tested it in. So that is not going to go away. Like this dude can create an mRNA vaccine and inject it in his dog without really like checking it. But that's never going to change, right? So there are big opportunities in these you need to improve the verification exercises that that you run on AI. But AI, still often spits out and will continue to spit out, especially if we're kind of always improving AI, things that, have imperfections, right? So there's still going to be that. And also, I do think kind of tied to that, there is just AI is amazing for getting 90% of a job done, right? This is what it's great for in white collar work. But that final 10%, we should never forget that. And there will be a lot of the value is going to come of that, right? And so
The human judgment.
the human judgment, the human polishing. You create a piece of content for marketing and you just create it with AI and you put it out there, which annoyingly for all of our ears and eyes, most people seem to do. But you spend at half an hour really polishing it, honing it, removing the LLMisms, adding the context, putting the message, the call to action, whatever. It's a really powerful example of man and machine working in compatibly. But that is so important these days. So anyway,
well, let's talk about a product which is possibly doing the opposite or the counter to that, which is Google Stitch, very quickly.
Yeah.
So it looks like there's some more side swiping at some of the models from the hyperscalers. So Google just coined the term vibe design. Don't know if it'll catch on, but we'll see. And if you're a startup in the AI app builder space, you should probably pay a little bit of attention. Yesterday, Google Labs upgraded Stitch into a full AI native design canvas. So you describe what you want your app to feel like, and it generates the high fidelity UI with exportable code. It's free, infinite canvas, voice interaction, instant prototyping, ships with an MCP server. So your design just flows straight into the toolkit that you're working with. So who's in the blast radius here? Well, obviously Lovable. Now they've just hit 400 million ARR. They've just crossed a 6 billion valuation, fastest scaling European startup we've ever tracked. Even Lovable's head of growth has said that her biggest fear isn't rivals, but it's the platforms with the big distribution. So how this will pan out is yet to be seen. We see many other products that don't encroach, like Google's DocuSign product hasn't really nibbled away much at the DocuSign efforts, but look at their share price over the last year or so, and DocuSign isn't doing particularly well. So maybe that's just a matter of time. But Google Stitch, Mads, kick off this one for us.
Yeah, I think you asked some of the right questions, Dan. I mean, we talked on the last episode about how nobody writes code anymore. And now Google is trying to collapse the design layer too. And now we get to a point where nobody designs anymore. I think the way Stitch integrates with tools around the ecosystem, you can integrate it directly with Claude Code with MCP. You can integrate it with all of Google's in-house tools. Is quite neat. Shows they're serious. They obviously have, as you say, massive distribution. The question is this just a distribution play for Gemini, or is it their attempt at building a standalone? Right now, it's still too early to say for sure. Lovable is still more capable and I think a more polished product. But I certainly would probably keep me a little bit sleepless at night if I was kind of one of the specialist firms like Lovable, and that was my business model, and I saw Google introducing something as good as Stitch is.
Yeah. I mean, Lovable have introduced a new business model, I think, haven't they? They're doing something different.
Well, so they are trying to go after the model we've seen with Claude Cowork and that we've seen with Perplexity. They launched their personal computer, which is sort of this whole idea of I'll use it as my command console to get work done, not just as a chat bot to ask questions and get answers from, but a place where I upload my documents, my data, and it can then turn data into new presentations and new formats, and it sort of becomes the central hub for my work. And Lovable is going straight after that segment as well. So the cat and mouse is being played.
They're getting a lot of immediate hate for that, as you might,
Why?
There's
Why,
people,
Lomax? What's the deal?
calling this the death knell of Lovable. They're getting a lot of hate because I guess people are saying, look, you can't be all things to all people. You need to stick to what you're good at, to what you're known for. You need to double down on that. You're now encroaching on so many other people's turf. You're diluting your positioning on the market.
But maybe this is the new world. Maybe this is the new AI world where you are not as focused and very anti what we talk about as VCs, which is focus, focus, focus. Maybe you can. Maybe this is the new world that we're living in.
No, look, and there are precedents, right? So Notion went from docs to workspace, Shopify from, I guess, store builder to commerce platform. each time you kind of expand, you get a bit of pushback and hate and questions around whether you can actually cut it. And so time will tell. But it's definitely a sign from Lovable Mads, that that they feel that they can't just completely swim in this single
Feel the
channel.
heat, yeah.
You feel the heat.
100%.
Right. Gentlemen, last but not least on the list is a little bit of government-ish announcements. We've got two of them. We've got the non-competes and EU Inc. Taken together at their word, could be significant structural reforms for European startups. On Monday, Rachel Reeves used the Mays lecture to announce limits on non-compete clauses, the first time a UK chancellor has explicitly targeted non-competes as an innovation blocker. She framed that alongside the 500 mil in the Sovereign AI Fund, 5 bill for the British Business Bank, and a procurement overhaul designed to make government a launchpad for UK scale-ups rather than, in her words, a check for global incumbents. Then on Tuesday, European Commission unveiled EU Inc. Again, we've seen a few of these releases of PR, which is the single corporate framework that lets you register a company in any of the 27 member states within 48 hours, fully online, under $100, with no minimum share capital and no notary required. I don't know what the notaries are going to do. They must be very upset. And Brussels wants this passed by the year end, but it's super watered down, plagued with pitfalls. So two reasonably big announcements for our world, but will execution meet ambition? Can it? It could be everything, it could be nothing. Lomax, what do you think?
So let's maybe focus on Rachel Reeves' speech at the so-called MICE lecture that she gave this week.
Is that how you say it? Is it mice, not maze? Sorry. I thought it was
maybe it is
maze.
Maybe
I don't know.
Maybe I've been in Portugal too long. I don't know. In Portugal, it's doing mice. But anyway, obviously it's not mice. Look, I think that this is not just focused on tech, and this was a broader economic competitiveness, productivity speech. I think, actually, interestingly, she did a pretty good job, which I think the Starmer government hasn't done a brilliant job of so far, of like really diagnosing the perhaps bleedingly obvious problems that we have in the UK, which is, as a reminder, low productivity growth since 2008. Planning rules have really rationed housing and infrastructure, and then a huge accumulation of regulatory barriers that have steadily raised the cost of doing anything at all and or made things doing impossible. So I think she kind of set that out and set out, antidotes to that. Interestingly, in the context of tech, as you alluded to, she just said a few interesting things. So one is she said that the UK will achieve the fastest AI adoption in the G7. So this actually kind of goes back to what we talked about before, is like, if you can't develop the models, you become the earliest adopter, the biggest user. Well, God bless her, like, fair enough. Okay, well, if the UK can be the biggest and fastest adopter of AI in the G7, I mean, that's suspicious.
That's not a bad strategy. I don't think that's a bad strategy.
You want to increase productivity, this is what you do. Then they announced a bunch of money, and actually against the backdrop of European governments announcing financial incentives for startups and generally getting laughed at by the Americans because, in the case of France, it was about, 10 million euros. She's actually announced 2.5 billion across AI and quantum, right? So 500 million for the Sovereign AI Fund, which you talked about, Dan, and then 2 billion to upgrade the UK's quantum capabilities, including a procurement program to actually spend up to 1 billion buying quantum computers from UK quantum computing manufacturers, which is amazing because
be the customer, government, be the customer.
Exactly, which is what we've said here a lot. Don't just give out grants, like actually become the first customer record, which is really, really great because, again, especially in the backdrop of quantum, where a number of leading quantum teams have actually left the UK and gone to the US, there are still, God bless them, including in my portfolio, so I'm talking my own book here, some wonderfully talented and dynamic quantum teams still here. And this actually, I think, is a really, really important thing for them, that they stay here. And she's actually talked of 100,000 jobs coming out of these initiatives, right? Interestingly, that she then goes on to, I think, undermine herself, because we talked about 500 million, we talked about 2 billion, then we talk about 13.8 million into the UK's 5 national quantum research hubs and 12 million into the quantum researchers. I don't. Someone needs to work with the
Is that the
government
coffee fund? Is that
it's just
the lunch tab?
And when you read it on the government's website, they all have the same level. They're all in the same area of the same stage of the hierarchy. It doesn't make sense to me. Anyway, I think, look, generally pretty positive things for once from a Rachel Reeves speech.
Great. Mads, anything on Reeves or anything on the EU Inc. piece that you'd pick up on?
I think the non-compete piece is really interesting. California banned them decades ago. It's probably the single most cited structural reason for why Silicon Valley has the talent velocity it does. We know there is a massive tech sector in the UK and in London in particular, and we know what it can do if that talent can circulate freely between startups. I think this could be the start of a completely new chapter for the UK's tech scene. So I think it's very exciting. I don't think we've seen any specific timelines yet, but certainly something to watch out
Always. I'd kick it down the road. But the slightly depressing thing, which always makes me laugh, is that these speeches are often peppered with phrases such as hubs, centers, programs, the AI hub for this, the quantum research program for this. And you and I know that that's like, okay, that sounds wonderful in a kind of political speech, but when have these things actually done any real good? I mean, it's an optics point more than anything, but I feel like they tend to be, well, not more than optics, like focusing on the wrong things, but still, God bless them, they're hot in the right place. Funny enough, so EU Inc. thing I think is good. It's just like, this is much of the same. This is the single EU entity, which will be quick to incorporate and cheap to run, and will harmonize a bunch of the European legislations.
Delaware, Europe's Delaware.
Yeah, and that's now been kicked off in the legislative process. I think they're trying to get it done by next year, I think. But there are going to be
by the end of this year.
There are some pretty entrenched lobbies there fighting against that. Interestingly, by the way, guys, I just incorporated a bunch of entities in Delaware, and it didn't take me 24 hours. It took me quite a few days. And at one point, I was told I could accelerate it if I sent a fax to the registry. So,
I thought it was only the NHS that had fax machines.
I know. I was like, exactly. So maybe it's not the hallowed turf that we thought it was.
But I know, but we always think that everything in the States is paved with diamonds and gold. I mean, that's how it feels to European venture and European startups.
The simplest and easiest place to, I mean, maybe some of the Baltic countries, but the UK is still an incredibly easy place to incorporate a company with a laptop and a credit card. Although I would say it's got harder. 3 years ago, it used to be really simple. Now, having incorporated some things recently, I've noticed there's a few more questions, a few more KYC. It doesn't happen automatically. It used to be automatic. Now they go away and run some kind of KYC or something. So, that sort of...
It's not chasmic. It's not a chasmic shift.
No, but going back to the beginning of what I said about Reeves' speech is, this kind of steady, like incremental layering on of new regulations and rules every year. I felt incorporating a company in the UK 3 to 4 years ago literally was, laptop, credit card, 20 minutes, done. Now it's like laptop, credit card, half an hour, 40 minutes, bit more form filling, and then wait 2 days to actually get the confirmation.
I think there was a fraud challenge, wasn't there? There was some other.
Of course, like if you can incorporate a company with a credit card and laptop in 20 minutes, you're opening yourself up to potentially that kind of thing. But still good.
Anything more on the EU Inc? I'm slightly anxious that it's not going to roll out in a way that's going to work. But anything on the EU?
Yeah, it'll get watered down. That's the problem. And the problem is the EU Inc. website, which is very clear and has great mission statements on it, and actually not more than just mission statements. It has really good detail as to what the.
But just to be clear, Lomax, we've got EU Inc., which is the movement, the Andreas Klinger et al. Movement, and then there's EU Inc., which has been adopted by the EU as the name of the.
You go to the movement's website, which outlines what the corporate structure will look like, what the rules would look like, what the employee share option scheme, which is kind of a separate but connected point.
Well, what it should look like.
Correct.
This is what they posit will work.
And it's exactly. And if that starts to get watered down and pared back, and we talked previously about some of the reactions from the incumbents on this. There's the labor lobby that don't like the fact that the employees are going to have less say on some of the more kind of continental jurisdictions where employees have a big say in how companies are run. They're going to fight some, it's tin hats on for them. They're going to need to really push it through.
Yeah. Okay. Lovely, gentlemen. Any deals of the week? Anything happening this week? Maz, you got a deal of the week?
Yes. So we saw Travis come out of stealth.
Not the band. We're not talking about the UK band here. Travis.
We're talking about Uber founder Travis Kalanick, who has been running cloud kitchens. So he's been 8 years in stealth, and he wasn't really in stealth because he was running cloud kitchens and had raised more than $1 billion to make automate the making of food. And people were scratching their heads a little bit and sort of saying, what is all this about? Well, he came out of stealth over the last week with a company called Atoms. And the whole idea is to look at 3 verticals within physical AI in food and hospitality, in transport, and in mining. That's the new head scratcher, is how are these 3 things connected? Travis is saying it's all about specialized robots, not humanoids. And it's all about having things and giving intelligence wheels to move and transport and do things in these different spaces. Now, the puzzle for us, as I said, is why he combined the 3 in one company. We're big believers in physical AI. We try and invest in it through a portfolio of companies, not squash everything into one business. He's taking the opposite approach. He wants to do all of it within his company. Why does it all matter? We could say, well, he is one of the greatest operators of his generation. The thing he did to build Uber was a superhuman feat, and clearly a company that today dominates its industry and sector. And the question is whether he can repeat that in his new space. If he can, Atoms is going to become a very, very important company. But I think the jury is out whether this will really work.
Never bet against him. And there was this week, gentlemen, a certain announcement from a UK fund manager around a big commitment from the British Business Bank. Who was that?
They sound awesome. Who was that?
I know. So congrats, guys, on a £50 million anchor commitment from the British Business Bank. Is that right?
That's right, yeah. And just levering up all the private capital at the moment.
Your fund 3, correct?
Hopefully more announcements to come.
Excellent.
Well,
Well,
more
guys,
announcements to come.
huge chapeau to you. Really important. Focus on, obviously, physical AI is a big theme for you guys, right?
Yeah. And just for the record, we were in there before it was cool. We were doing this before it all.
You were in there when it was called
de rigueur.
Industry 4.0 at some point a few years ago. No.
Wow. Yeah. The names may change, but the innocents are protected.
But guys,
Yeah,
but guys, huge congratulations. I can be the doomsayer when it comes to Rachel Reeves, and you guys, we love the British government.
Well, yeah, lots to do and very exciting times. Thank you for that, Lomax. Gents, anything else happening this week? Anything we need to know about? Anything in the diaries?
So what's coming up in the week ahead? Discord is starting their IPO roadshow, targeting a NASDAQ listing, $15 billion valuation. Do you know, that used to sound like a lot of money. $15 billion, it's almost like
It's funny. Almost,
right?
Yeah, how the world has changed.
Indeed. We've got KubeCon in Europe, so it's the largest cloud-native conference in Europe. I think at least a few of our found teams will be there. And there are a couple of other conferences and things going on, but no major central bank meetings that I can see.
Didn't the Fed announce
They cut rate
steady? Did they cut?
They cut. Despite
interesting.
all the shenanigans going on globally and the expected inflation.
Okay, well, we'll see how that turns out. Lovely. Gentlemen, thank you so much for your time, and we'll catch you next week.
Goodbye.
See you in the next one.